Hello, my name is Erin Swenlin from decisionpoint.com, and I want to welcome you to your Daily 5. I'm going to show you the 5 charts that I think are really the most interesting and will prepare you for the week ahead. So first, before I begin, I do want to let everybody know I have a live trading room on Mondays from noon to 1 p.m. Eastern. You can sign up just by going to decisionpoint.com. Sign up for our free newsletter and you will get the links to sign into our free trading room. So I'm going to start off with the 5-month candlestick chart. This is one that I always look at in the DP Alert Daily for our subscribers. And obviously we're having a pretty difficult day of selling, but I want to make you feel just slightly better. And that is that we really haven't had a breakdown from this bullish falling wedge. So there is still some upside potential here. Certainly we have quite a lot of bearish activity. And one of the things that's really been bothering me about what's going on is that we've been getting these deep days of selling, but we're not seeing the VIX really elevate to the degree that we've seen it in the past, which usually lines up with some short-term market bottoms. You can see right here where we had a puncture and a bottom. You can see we had a puncture here and then another bottom. Unfortunately, we're not seeing that right now. The VIX is showing weakness as it is beneath its EMA on our inverted scale. And we still don't have that puncture. So that's been leaving me still a little bit concerned about what's going on. This would be another one right here is today we're getting a IT trend model neutral signal right now on the SPY. And we have not seen the 20-day EMA drop below the 50-day EMA since just before the bear market. Now, I'm not saying we're getting ready to have an extended bear market, but certainly the market is looking very weak. And we need to see it hold some sort of support here. We aren't holding this vertical level of support right now, but we are above this level right here, just above 420. I think 420 is probably where we're going to be seeing our reversal. We may have to endure a bit more downside, but we need to see a bit more we need more capitulation in the market. And the VIX is telling us that we just don't have it yet. So we do have some bullish characteristics to our charts. So I will be talking about those, and that does give me a little bit of hope that we're going to see a bounce here soon. Now, I'm not talking about a really strong bull market bounce. I'm just saying something that would take us out of the decline we're certainly experiencing right now. Let's look at our short-term trading oscillators, the Swenlin trading oscillators. They've been giving us some really good warning about this market top that came in back here. You can see where we've marked that top right here with that red vertical. And you can see that that red vertical lines up with the oversold reading on the STOs. And then we started to see the rise. And now we didn't even make it to overbought territory, at least for our STOB. And it already had started moving down. So we knew there were some problems. The fact that we were still seeing the STOs moving lower, and the STOV is not at all oversold, which is a problem as well. But as I said, we have these bullish characteristics on a lot of these charts, and this one as well. We have bottoms on the SPY that are declining, but notice that our indicators are actually showing some bullish positive divergences. So all is not lost. I think really at this point, we need to come down and test this level of support. And once that holds, I think that will put a little bit more comfort in the market, but we need to probably move a bit lower in order to see that capitulation of the market participants. So now it's time to talk about climax analysis. This is a complicated, sort of a complicated idea of one of the things we do for our analysis here, and that is we look for very, very short-term market climaxes. And a climax is determined by expanded outside readings on the net advanced declines and net advanced decline volumes. We also like to see that puncture of those lower bands on our inverted scale of the VIX. And then we look at total volume, and when you get it very high and it rises very quickly, that's when we start looking for these climaxes. So you can see that we had on Friday, we actually had an upside initiation climax, which tells us to look for either sideways price movement or some upside. Now, I did mention this in my letter. While I felt pretty good about this upside initiation from Friday, we still had a lot of problems, and those were the net AD hadn't gotten out of its range like we usually see on a climax, and the VIX had not punctured that lower band. The volume ratios were definitely confirming, though, an upside initiation. We had very high up-down volume ratio for the NYSE and for the SPX. And you know what we look for are readings that are above 3. So while we didn't get a reading quite as high as we've seen in the past, it was still above 3. We still had elevated total volume. The big issue for me was we didn't have that puncture of that lower Bollinger Band, and we still really didn't get quite as climactic readings, the same kind of climactic readings that we often get on net advances and declines. I don't think that this upside initiation is completely busted at this point. It certainly doesn't look good, lower high and a lower low, but I think there's still that opportunity now that we're getting really stretched out. It'll be really interesting to see whether we get a selling initiation here, maybe a selling exhaustion. It's not looking quite so good right now for the market, but there are some of those bullish characteristics out there. A lot of times an upside initiation climax will result in churn, maybe a little bit of upside. We're in a bearish environment here. There is a very strong bearish bias in the short term, and that's going to be really hard for the market to overcome to give us a really nice short-term bottom. The sector to watch, I think, should be no surprise. And actually, last time I was here on your Daily 5, can't remember how many weeks ago, but my sector to watch at that time was energy. And I think energy is still the place to watch, the place to be. It's going to be one of the few areas that will do well with inflation. Also, you want to look over at, the agricultural stocks. You want to look at the metals, which I'm going to talk about shortly, and materials. Rare earth materials seem to still be holding up pretty well. But let's go ahead and dive in a little bit closer to the energy sector so that we can see what's going on under the hood, as I like to call it. So as you can see, we had this reverse head and shoulders on energy. There's a neckline right through here. We didn't draw that, but we got the execution of that pattern off of this bounce when it came and broke this declining trend line, this neckline of the head and shoulders. And since then, we've really been taking off. And just looking at price action right now on energy, we do have a flag formation, and that is a bullish pattern. It suggests we'll get a rally that is the length or size of the flagpole. So that certainly tells us we're going to get a breakout above this area of overhead resistance, plus a lot of follow-on if this bull flag is correct. Now, there are a few things that might worry an analyst when you look at this chart. First of all, is we do have an RSI that is getting overbought. We have very overbought readings on participation. 100% of the energy stocks have their price above their 20 and above their 50-day EMA, which is why you're seeing that Silver Cross Index moving up so quickly here. The Silver Cross Index measures how many energy stocks have a 20 above their 50. Well, if prices above, if everybody has their price above the 20 and 50, those few 10% that haven't gotten their Silver Cross, As long as they stay above that 20-day EMA and the 50-day EMA, that is going to bring those EMAs upward, and then they will give us that silver cross. So very soon, I am expecting to see 100% with silver crosses in the energy sector. Now, these are really overbought readings, right? So shouldn't we be concerned? I would say no. And the reason why is looking back at history just from this year, particularly back here in November when we started to see the energy sector break out, and you could see that we had overbought readings. In fact, the silver cross was at 100% for a few months. So that's not really an issue in my mind. And then you can see participation also managed to stay overbought for over a month, weeks. And even though we saw some hiccups down here, overall, it was overbought pretty much through November, December for sure, between December and March. And I think we're going to be looking at a similar situation here for energy. We're very bullish on energy. We talked about energy last week on our Decision Point show, as you know, sky's the limit for so many of these energy ETFs, and also for energy stocks, especially those in the oil and equipment industries, exploration. All of those areas in energy look really quite good. So for my final chart, I can't believe I'm already at the end here, I'm going to talk about gold. This is one of the areas that we cover very closely in the Decision Point alert every day. And Decision Point is kind of known for our analysis of gold because we follow it so very closely. So let's go ahead and look at the GLD chart. This is a 6-month candlestick chart. So first, a few things. So we had the bounce here off of this support level that I think lined up back here in March. And we made the move up, but could not get above this overhead resistance. We saw gold fall once again, sputtered a little bit along the way, tried to do a little bit of recovery, but certainly failed. Then we hit this support level once again. And we saw on Thursday a really nice rally in gold. You can see that the RSI had started to rise at that point. It's now just about into positive territory. We saw the PMO turn up. We were looking at very high discounts on the physical gold trust. All of these things were telling us that gold was looking pretty good moving forward. We didn't want to go all in on it because we'd seen so many failures moving up and then falling back down. I'll be really interested in seeing the gold miners chart today after the close to see if we're really starting to see some movement on an industry group that has been so beat down. If gold starts to make a move and we see the rest of the market pretty much floundering and not doing well, I would expect to see gold, silver, other metals, miners of metals, all of them to do pretty well. I would keep an eye on GDX in particular as far as gold miners. But still, let's keep going on gold. We're seeing right now it's trading above, GLD is trading above its 20-day EMA. We have a really nice bullish engulfing candle here setting up that really suggests that we're going to see some follow through even if we do close higher today on gold. The PMO is rising. It's almost hitting its signal line for a crossover buy signal. The other thing I've added to a lot of my charts of late is full stochastics. And one of the things that I like to do with full stochastics is to compare what's going on in stochastics with what's going on with the PMO. I find that we get turns in stochastics and then the PMO will confirm. And that's what we got back here. And what I like right now is that we had these oversold stochastics. As those turned back up, so did our PMO to confirm that. And now it is rising and getting ready to move into positive territory. I find the stochastics are really helpful in determining the trend the trend shifts, but also in telling us whether the move or rally is going to continue. And really, I look at stochastics and I think that that is the case. Now, let me talk a little bit more about the discount premium here. We measure what the discounts or premium are on the physical gold trust. It's a closed-ended fund, so people will buy the fund. They'll either buy it at a discount based on what the gold trust currently holds and the price of gold, or they'll end up buying it at a premium, where you can see we actually had one day in the last 6 months where we had a premium, meaning they paid a little bit more for that fund than what was actually in the trust and what the gold was worth at that moment in time. So we've been seeing really high discounts. And typically when you see high discounts, certainly that means that investors are bearish. And when we get very bearish sentiment, sentiment is contrarian. And when we get bearish sentiment, we should expect a turn. And we really hadn't seen very elevated discounts over this period of time. We did start to see them get rather deep. We got a little bit of a rally off of it, but not very much. I think that we're in a better position. It looks like we're getting closer. Discount levels are getting closer to what we saw back here in April, which led into the gold rally. So I think we're going in the right direction here for gold, and I would expect to see it continue higher. That's all I have for your Daily 5. I do want to mention again, my name is Erin Swenlin from decisionpoint.com. If you're interested in climax analysis, if you're interested in seeing what's going on with gold every market day, highly recommend you check out our Decision Point Alert. If you're a trader and you like trading rooms, Decision Point Diamonds is the way to go. I have a subscriber-only trading room that goes with the Decision Point Diamond subscriptions. And right now, if you want to try us out for a week, just subscribe to our bundle and use the coupon code DP Trial. And that's all I have for you on your Daily 5. Thanks so much for watching.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.